Hey everyone, me Kevin here. Jerome Powell just spoke for the first time during the Biden administration about the future actions that the Federal Reserve is planning on taking or not taking. We also got some commentary on stimulus and inflation. Here is a summary of what was said. First, the Federal Reserve, as expected, decided to maintain interest rates near zero and maintain, quote, sizable asset purchases of $120 billion per month. This was also expected. $80 billion in treasuries, $40 billion in mortgage-backed securities. Jerome Powell then went into his statement, very, very generic, normal statement. We get more entertainment in the questions, but in his statement, he reiterates the path of the economy depends on COVID. Housing sector has more than fully recovered, supported in part by low interest rates. Household services are down, and several developments point to an improved outlook later this year, vaccines and returning to normal being some of the things that are encouraging getting back to normal later this year. Which, anytime we hear getting back to normal later this year, the stock market starts thinking, oh, is that like a tell? Is that a sign that Jerome's gonna, slow down the support for the economy over time? So we kind of saw the stock market actually pull back slightly. Not much. The stock market overall has been a little bit red today. Oops, those are my notes. There we go. Has been a little bit red today. The Dow being down 2%. Let's go ahead and hit the S&P really quick. Let's see what the S&P 500 is doing. S&P's down 2.5%. We've got, let's see, NASDAQ. NASDAQ's actually up 0.4%. But, so we've got this mixed market right now. Partially that could be because of the insanity that's happening with GameStop and BlackBerry and AMC, where we've got these massive short squeezes where it almost seems like institutional investors and individual investors alike are paying heavy attention to these heavily shorted stocks right now, and the rest of the market is really selling off. For example, even leading up to the speech, we had Tesla was relatively flat for the day. We had Lemonade was up like 10-11% in the day. But now, after Fed Chairman Jerome Powell spoke, Tesla's down about 2%. Lemonade's only up 1% in the day. We've got a lot of stocks down 4, 5, 6%. Target, Etsy, PayPal, Netflix, Darden, Shopify, Redfin, AMD, Shift, like EXPI, the entire market is basically selling off, with the exception of stocks that are highly shorted right now. Jerome Powell was asked to comment on this, specifically using GameStop as an example, and he refused to comment on this. But we did get some other insights. So let's get to some of these other insights that he has. Let's fast forward a little bit so we don't cover the redundancies. So first, he reiterated fiscal stimulus. And what he used as a gauge for determining how much fiscal stimulus Congress should do, so fiscal, remember, is Congress, monetary is Fed. Fiscal would be like stimulus checks, unemployment pay, and that, which Jerome Powell has said he's very supportive of. He says it's very important that we address the fact that we are 9 million jobs short right now. That is 9 million people who are unemployed, who have lost their jobs, and this is as many people who lost their jobs as during the global financial crisis in 2008. So this is Jerome Powell really signaling, look, Congress, your work is not done until those people are back to work. Now, people did then ask him, hey, look, but if you keep advocating stimulus, Jerome Powell, isn't it possible that with you advocating stimulus and low interest rates, you're fueling asset bubbles? And this is something, I'm going to make a quick little side note here. Side note, it's very important to remember that asset prices going up is not inflation. Inflation, when we think of inflation, we think of consumer prices going up. Like, wow, my milk is more expensive, my phone is more expensive, my computers are more expensive. Asset prices going up are a different, I mean, you can look at them as a style of inflation, but they're different. So when we talk of inflation generally, we're talking about consumer prices going up. When asset prices go through the moon, real estate, stocks, whatever, people have more money, and that could lead to consumer prices going up. But it's important to separate those two things when you're thinking of inflation. But now, in response to the question as to, is the Fed just feeding a massive bubble? Jerome Powell actually said, he started off by saying, well, the shock to the pandemic was unprecedented, but it's really important that we keep supporting the economy until we get to 2% consumer price inflation. They use the personal consumption expenditures, which is very similar to CPI. But anyway, he says, we actually don't think that low interest rates are what are propping up asset prices solely. He says they're partially to blame, but then he also talked about basically news and media, and he didn't say it, but you could read between the lines and say that, social trends and social news, aka Wall Street bets, those things are more likely to create bubbles than low interest rates. He didn't exactly say that, right? So we're pulling an implication here. But he did say that monetary plays a role, but news drives asset values. Low interest rates are not as important, is what he said. And look, don't get me wrong, interest rates, this is me speaking now, interest rates are really freaking important, because when interest rates are low, we go buy more real estate and we go buy more stocks, right? That's obvious. So for him to say that interest rates are a small part of asset values going up, Jerome Powell is basically saying, don't ask me about what's going on with GameStop. It ain't my interest rates, it's Wall Street bets. That's basically what he said. He refused to say it directly, but that's basically what he said, which is honestly quite hilarious. It's awesome. It's awesome. I love this. I mean, I feel like this is the robbery of the short sellers and those evil hedge funds, the suits. Even though Jerome Powell's wearing a suit, I think we generally like Jerome Powell. I mean, he's cranking a money printer. How could you be mad at him? Anyway, there are some people who are worried that this is going to lead to long-term inflation. And this is the other part that's very interesting is he's asked, hey, well, aren't you just going to create long-term inflation? I mean, shouldn't Congress be concerned about all this potential inflation coming because y'all keep cranking the money printer? And you're like, nope, it ain't low rates feeding bubbles. It's not us. It's Wall Street bets. And to that he responds and says, we've been struggling with disinflation for a while. We have, for 25 years, had inflation that has fallen short of 2%. The Phillips curve is very flat, which is a very fancy technical way of saying when we have low employment, we don't actually see inflation anymore. Usually when there's low employment, people get paid more money and you see inflation. We're not seeing that. So Jerome Powell says in the near term, he does not expect that we will see any inflation in the near term. He does say that there may be short-term incidental increases in inflation, such as in March and April when we get high inflation year-over-year data. We could see, 12-month inflation move up a few tenths of a percent, he says, but we could also see year-over-year inflation clock in at like 3.5%. That's just incidental. That's just math. That's because inflation was so freaking low in March and April of last year when the pandemic began. That makes sense. People dropping prices just to stay alive and sell stuff. But then he also says, look, once the economy fully recovers, there is going to be a burst of spending, right? He believes that there will be this explosion of spending when people are like, basically, yay, the pandemic is over, let's go spend money. But he also believes that that is going to be a temporary impact. So the two catalysts for higher inflation, he's basically saying, we think those are going to be pretty low impact items. And instead, what's more important is focusing on longer run inflation trends. So he's saying we are not going to react to the inflation we're going to see in March and April. And he's also telling us we are not going to react to the inflation that'll come when people go back out and spend money like crazy. Those are big statements. He instead believes, he says, I am much more worried about falling short about a complete recovery and people losing their careers and livelihoods because they don't get back to work in time. He says that is much more important. He also looks at and this is sort of another aspect here on vaccines, he likes to look at the downside risk. And he goes, look, we basically have to keep supporting the economy as if we're going to have worst case scenario happen with vaccines. Which when he says that, and this is where the signals are sometimes mixed and confusing, when he says that, people are like, okay, well, if you're using the worst case scenario for vaccines, what if we get the base case or the best case scenario? Isn't that going to force you to change your position sooner? And those are, I think, the implications people are taking. I think that's partially why we're seeing a ton of stocks down today. And that stock decline has accelerated in this last hour following Jerome Powell's initial speech here. I mean, we've got a lot of red in the markets today, with, again, the exception of AMC, BlackBerry, GameStop. But anyway, moving on. Let's see here. What else do we get? So Fed support. Jerome also makes it clear, look, we're not going to do anything to hold back the economy. It's the virus that's holding back the economy, and we should be focused on, obviously, eliminating the virus. Then he says there's still considerable risks, but look, the banking sector is doing really well. We're not seeing as many corporate defaults as we thought we would see. We're not seeing defaults, we're not seeing banking issues, we're not seeing red flags in the economy. He didn't use the phrase red flags this time, but he has in his last speech, or last talk, one of his last talks, he talked about we're not seeing any red flags right now, which is very interesting because certainly there, some folks say the insane jump in asset prices might be deemed to be red flags. He does talk about how any talk of tapering is premature, and that really until we get these 9 million people their jobs back, we are way too soon to decide to do anything. And Jerome Powell is telling us we're not even going to talk about reducing our efforts until things get substantially better for the long term. So yes, that is the update from Jerome Powell. The next thing to remember is tomorrow's my birthday, so use that B-Day coupon code down below and get 4 free stocks with Robinhood, because why not? They're totally free. If you haven't signed up for Robinhood yet, you could sign up. They don't make you put money in. You just have to link your bank account. When you sign up, you'll get 1 free stock right when you sign up and 3 additional free stocks on February 1st. Well, there you have the update from Jerome Powell. I will be live streaming Tesla's earnings call later today, and we'll also do a reaction to their earnings release coming out very soon. Stay tuned, folks. Thank you so very much for watching, and we will see you in the next one.